What's going on, guys? So today we have a very red day in the market. We're going to be looking at Aurora Cannabis, Canopy, Kronos, Aphria, Organigram, and a couple other companies. We're going to be doing some technical and some chart analysis. Also, I did find an article as to why Aurora Cannabis hasn't landed a deal yet, so I will be talking about that. And Aurora Cannabis earnings are coming up very soon, so we'll be talking about that and what to expect from Aurora Cannabis earnings as well. But before we get this video started, don't forget, give me a thumbs up, hit that notification bell if you're new here, and smash that subscribe button. So today we have a very red day in the market. We have the S&P 500 down 0.31%, Dow 30 is down 0.53%, Nasdaq is down 0.29%, Russell 2000 seems to be the only one up 0.2%, crude oil and gold are also in the red. Then we have companies like Hexo, Canopy Growth, Aurora Cannabis, all down. Aphria is the big loser today, down 6.2%. Tilray's down 3.73%. Cron is down 3.05%. So the whole sector seems to be down. We do have Tesla in the green, up 3.73%, which is good to see, especially after I just released my video yesterday about Tesla, and I did consider Tesla a buy yesterday at those prices. So Tesla's up 3.73%. Pinterest is down 5.2%. Zoom is currently down 0.8%. So overall, the market is red today. So we're going to do a little bit of chart analysis. We're going to take a look at Aurora Cannabis, which Aurora Cannabis is currently down 3.63%. And as you can see right here, I currently have a support line at around $11.50, a resistance line at about $12.30, and Aurora seems to be consistently trading in between these two lines. So as you can see right now, Aurora Cannabis is no longer uptrending. Pretty much for the whole year, Aurora Cannabis was uptrending on this line, and we were doing pretty well. I'm not going to blame it on Batley, but that is pretty much when Batley sold his 100,000 shares. We broke below that support line, and now we've been trading below that support line, currently using it as a resistance line. We're also going to take a look at Canopy. So I've drawn a resistance line for Canopy. This was a while ago, and we've pretty much been using this line at around $65.25. That was the resistance line for Canopy, and recently we did break above it. We went all the way up above $70, and today, because we had a very red day, we broke below that resistance line, and now we're pretty much just treading. We're trading right below it. So it's going to be interesting to see whether we break above Canopy's resistance line right here, which is at about $65. As you can see, it's pretty much just trading right below it. Also, we're going to take a look at Aphria, and Aphria was previously using this $10.10 as a support line, and today we broke below it. It seems to be like today is the day we either break below resistance or we break below support lines. And today Aphria broke below this support line. We're currently down at $9.41. We haven't been below $10 since February. The main reason for Aphria breaking down this low is they've released some pretty horrible, disappointing earnings, and we had a huge decline ever since those earnings, and it seems to be like we continue to decline. Anything below $8 for Aphria, I might consider a buy. So I'm going to draw a line here for Aphria at around $8. I'll be surprised to see Aphria go that low, but if they go below $8, I might start picking up some Aphria again. I am currently a shareholder in Aphria, so I currently own Aphria at $8.58 per share. So if it starts going below that price, I might consider buying Aphria again. As you can see, now I'm only up $9.42, 9.4% with Aphria, which does suck because at one point I was up 60% with this position. So that's the gamble with when you invest into pot stocks, you do see big swings like that. So I'm going to draw a support line here at around $8.60. Was previously acting as a resistance, kind of acted like a support here, so this will be the new support for Aphria, $8.60. If it breaks below that, I might consider increasing my position with Aphria. Next company I want to look at is Organigram, and Organigram has had a pretty nice run, especially in the last week. Had a huge gap up here from $8.77, gapped up all the way to $9.25. I did mention, I'm pretty sure it was in a live stream, or I'm not sure when I mentioned it, but I did mention that eventually that gap was going to get filled. So it does look like eventually we do seem to see that gap getting filled. We did have a support for Organigram at $8 and around $8.70, a resistance at $9.75. We broke above that resistance line and then almost immediately got rejected below. So now we're hovering right below that resistance line. And as you can see, we attempted to break past resistance, immediately got rejected. Also, I'll be keeping an eye on Organigram to see whether Organigram starts trending down or attempts to break above this resistance line again. But anyways, that's it for the charts. I would be cautious and kind of see how the rest of the week and next week pans out. It could just be one red day and then more green days to come, or we could break below this support. So I'll be looking out to see if it breaks below the support. We've been kind of using this line as a support for, it looks like, a couple months now. So I'll definitely be keeping an eye out on that. But we're going to move on to some Aurora Cannabis news, which is Aurora Cannabis hasn't signed a deal with a giant US firm like other companies, and here is why. So Aurora is one of the only two major Canadian cannabis companies with a market value of more than $1.5 billion that has yet to ink a partnership or investment deal with a major US company. But that's because a rich American advised executives not to do so. So several sources in the cannabis industry have suggested that the absence of such a pact of Aurora is conspicuous, but it has not held the company back. Revenue nearly quadrupled in its most recent reported quarter, and the company said it had captured about 20% of Canada's recreational market. So MarketWatch recently sat down with Aurora's CEO, Cam Batley, to talk about why the company hasn't made a deal with a major US company. So the following has been edited for clarity and length. I'm going to pretty much read this to you guys. MarketWatch: why hasn't Aurora inked a deal with a major US tobacco beverage or other companies like your rivals? So Cam Batley said, we've talked to everybody who has done deals already. We are taking a different approach. We started to get counsel from a very sage source, hedge fund manager Nelson Peltz, in the United States several months ago, which was in view of some other companies handing control to a larger entity in a mature industry like Constellation or Altria. In those cases, they've got board control of those companies and they're on the path to majority ownership. So Peltz said, don't do that. And here's why. If you sell out now, it's going to mean selling your shareholders short because the value of your company is rising every quarter. There's no need to do that. The opportunity exists to create strategic partnerships across more than one vertical. You don't have to become a tobacco company. You don't have to become a distiller. You can partner on a strategic level with multiple companies across multiple verticals and remain independent. The key to that is separating in your mind the concept of strategic partnership and capital raise. There's no need to assume that those two things go together. If you have sufficient capital, especially if you're moving into a cash flow positive situation as we are in 2019, there's no need to necessarily combine those two concepts. I was there with him along with Executive Chairman Michael Singer and Chief Executive Terry Booth and our CFO Glenn Ibbett, and it was fascinating because not only did Nelson participate, but he got his entire senior team together and devoted 2 full days in New York to us and invited in very, very big players into his offices to essentially pitch to us, the biggest financial institutions. So that's our strategy. It's to do things a little bit differently. We do things differently across our business strategy. Cultivation is one where we're the only one of our peers that's producing at a mass scale that has simply rushed into retrofitted greenhouses and millions of square feet. And I think that decision has shown a great payoff thus far. We haven't faced the kinds of issues that other companies have. So there you have it. And we've talked about this many times, and I've made a bunch of videos on Aurora Cannabis and their partnerships. Since day one, I've always talked about how I do think Aurora Cannabis should partner with more than one partner and not just one big major blockbuster deal. I don't think Aurora Cannabis needs to do that. And it seems like Cam Batley agrees with that. It seems like that's what Nelson Peltz is advising, and I do think that is great advice. So this is a very, very long interview with Cam Batley and MarketWatch. But that was the main point that I wanted to bring up was Cam Batley talking about the potential partnerships and Nelson Peltz and how he pretty much lined up a bunch of companies for him to pitch to Aurora Cannabis. So that's proof right there that there's a lot of companies interested in partnering or investing into Aurora Cannabis. It's just going to be a matter of time until Aurora Cannabis finds and lands the best possible deals. Not just one deal, but multiple deals, which is what I'm expecting, and I'm sure every shareholder is also expecting. So another article I want to talk about is Aurora Cannabis is expected to report wider losses. So the EBITDA, which is often considered to be measured of core profitability, is expected to remain depressed for Aurora Cannabis. The company is scheduled to report its earnings next week. The company's EBITDA is expected to be negative 24.7 million Canadian dollars, a rise from negative 22.5 million Canadian dollars in the third quarter of 2018. So right here you have ACB's loss per share estimate, and you can see right here third quarter 2019 we're at negative 0.06 cents per share. So the increase in selling, general and administrative expenses along with marketing related expenses is estimated to have a negative impact on the company's core profitability. Most cannabis companies including Canopy Growth, Tilray and CanTrust are expected to report lower core profitability. The expenses in the future growth will likely outweigh any income generated. The companies are hoping that the expenses towards expanding their footprint will quickly increase their scale and capture a big market share. Aurora Cannabis is expected to report a loss in the upcoming quarter. The loss is expected to be 50.6 million Canadian dollars year over year. The loss is estimated to expand from a loss of 12.7 million Canadian dollars in the third quarter of 2018. The figure would translate into a loss per share of 6 cents Canadian dollars compared to 0.003 cents Canadian dollars in the third quarter of 2018. Aurora Cannabis closed at 12.1 Canadian dollars on May 1st. And as we all know, Aurora Cannabis is now sitting at $11.77 Canadian dollars. According to this article, Aurora is expected to report worse earnings. So I do think that could also be the reason why Aurora Cannabis and all these companies, the whole sector is pretty much down. But it's not just the pot sector. It seems to be that everything is down. S&P 500 is down, Dow Jones is down. So that could be pushing it in the downward direction. And on top of that, this negative news about Aurora Cannabis expected to release worse earnings this quarter could be another reason as to why we're having a very red day today. Aside from that, the revenues are expected to increase. So if we look at the analyst estimates for the quarter in the above chart, the revenues are expected to grow in excess of 363% to 74.7 million Canadian dollars in the third quarter from 16.1 million Canadian dollars in the third quarter of 2018. Sequentially, the revenues are estimated to grow 37% from 54.2 million Canadian dollars in the second quarter. So if we look at the gross profitability, analysts expect the gross income to increase 540% year over year to 48.9 million Canadian dollars. The increase would expand the gross margin to 61.5% from 47% in the third quarter of 2018. Aurora Cannabis trades sideways ahead of its earnings. So the earnings season is here, and Aurora Cannabis is expected to report its first quarter earnings result next week. Ahead of Aurora's earnings release, investors have been proceeding with caution with the stock trading sideways for the past month. ACB was down 0.8% as of 12 p.m. on May 1st. So what to watch? During Aurora's earnings announcements, one of the key metric investors and analysts will be watching for is healthy demand of recreational cannabis, which should be reflected in the company's revenue. Its earnings, on the other hand, are expected to remain depressed as it has continued to make investments in future growth. So there you have it. What do we expect from these earnings? It's probably going to be a very disappointing earnings. Do I think Aurora Cannabis will decline after earnings? Possibly. But Aurora Cannabis has been very forgiving, very volatile, and I do hope, which I hate to say this because I know a lot of my viewers are huge Aurora fans, I hope Aurora Cannabis does have a nice correction due to negative earnings. And the reason why is because it would possibly create another great buying opportunity. Aurora Cannabis has been a very forgiving company, a very volatile company. It's something that I don't mind. Whether Aurora, oh my god, you guys hear my puppies, right? It's like they found their new voice. So whether Aurora Cannabis decides to go up or down, I'm happy either way. If it goes down, I do consider that a great buying opportunity. Anyways, that's it for this video. If you guys enjoyed this video, don't forget, give me a thumbs up. If you're new to this channel, hit that notification bell, smash that subscribe button. I'll see you guys on my next video. Bye-bye.